Good day. This is an onboarding information for every new people or every new person who's a newbie, how to pass your challenge account and the basic routine you are supposed to keep and how to pick signal from our forum. Now, this script is going to be given to you. You have access to it from our platform. Either you are on the Felix trading in accord or you are on Planbxpress Cash Flow Solution Club, whichever one you are. Now you're going to see, you can watch all these videos there, but this is the basic thing I want to take you to straight away is about what are you expecting to be doing? All right. How do I go about my account? Now you have funded your account, you have purchased an account. These things are very, very, very important to sink to your mind. These about 12 things. Number one is that you are meant to split your budgeted lot into smaller lots for multiple positions calculated here. So in other words, our trading style is DCA. All right. So that to avoid too much issues for you is DCA. So our trading style is what? DCA. What do you mean by DCA? Dollar cost average. Now you are not meant to enter all your trade at once. You split it. And I'm going to show you how to go about that. Then set your stop loss and TP minimum of 1:2 risk reward. Meaning if you say you are going to risk $10, you have to target to make $20 in that trade. If you cannot see a room to which where markets get to forgive you $20, there's no need entering that trade of that your $10. Do you understand? Then exit your at your satisfied, you know, exit at your satisfied profit if you cannot wait. Sometimes when I send a signal and then you see that the trade is running on profit, but you know that maybe some trade may need to be monitored, especially scalping, and you are not going to be available and all of that, you already improve. You can stop it. Don't say, what if I stop it? The other time I stopped, then the market go much bigger. Doesn't really matter. This one is very important to trade your stop loss to BE, that's break even, after TP1 is crossed. You can see why with DCA. So what do you mean by that DCA? For instance, maybe tolerance of how many lots do you want to use? Let's say what you want to use 0.05, right? So for efficiency and protection and maximize profit, we expect it to split it maybe 0.01 in 5 places. Do you understand? That's what we mean by this DCA. Instead of entering 0.05, you can enter 0.01, 1, 2, 3, 4, 5. Then allow the trade to run. So TP1, you take on that 0.01, TP2 in that order. So that's what we mean by that. Then you go to about, we'll talk about, okay, trail, okay, yes. So imagine if you don't have DCA, how will you be able to trail when you have taken TP1? Imagine you just use 0.05 and TP1 hit. Well, it's okay, you have made money, but the market may continue to go. Then you want to have what you use to trail the market. So allow at least one position to trail the trend till obvious. That is, the market continue to go. You can use one, you can lead other one by the time you continue to trade it. Then expose 5 to 10% of your daily drawdown per trade. So now this is where clarification of what type of prop firm are you using, okay? Irrespective of what they give you as a daily drawdown. Some may tell you your daily drawdown is 3%. Some may tell you our daily drawdown is 2%. Some may tell you our daily drawdown is 5%. It doesn't matter. Whatever is their daily drawdown, it depends on your capacity. You can use 5% of it or 10% of it. What it means is that if you use 5% of it, if you use 5% of that daily drawdown, so you will, if you use 5% of that daily drawdown, you will have to lose the trade consecutively up to 20 times for you to disobey the rule for that day. That's what we are doing, conservative. If you use 10%, you must have to trade 10 times, losing 10 trade for you to actually violate that rule and blow and then forfeit the account. So always remember that you must not make more than the certain percent of the profit. So maybe you are just making money. Remember that what their consistency rules in case of instant funding, like on 10 trade, you have consistency rule. On Atlas funded, they have good funded. Most of them now have consistency rule. Okay, let's say the percentage of what you are making. Let's say what is your profit. So let's say your profit target is 5%, which is like say 2.5. So if it's 2.5, then I say on no day one single day should not be more than 25% of that 5,000 or 20 of that to 5. So if I'm using consistency rule for a profit target of 25, so let's say 2,500 multiplied by 0.25. That is no day you should make more than $6,625. Can you see now? Because if some that maintains transition rule, so what they want to tell you that on no day should you make more than this. So you have to maintain that. If not, they will now increase your target. That's what it means. So imagine, let's say you are making this times 20 days. That will be 12,500. So they say no day should you make more than 25% of that. So understand that there are three ways of entering the market: reversal point, pullback, or retracement, right? That reversal point is not pullback. Reversal point is that where the market have exhausted and is changing the entire direction. So pullback and retracement is that market is on a trend. It only pull back. That is a break in structure and a an impulsive move, and in a retracement, then you are looking for an entry. Reversal is that when there's a change of character entirely. Though reversal again is still what you are going to use to enter even a pullback. These are facts of things you are still going to do. Then breakout and retest. Maybe market is ranging and breakout at one point. Then avoid too many noise, both from your mind and also from external sources. Stop loss can be maximum of 10 pips, 100 pips with currencies, and 250 pips on gold if you are day trading or intraday. But maximum of pips of 30 pips on currencies and 100 pips on gold if you are scalping. Okay. Then split your lot size into two or more. I've talked that that's the first thing. Now, let me quickly read this to you. So, example of fund and risk management with traded mastery and fundedness. So, let's say you have a account of 10,000. What is the daily drawdown? They say 5%. So that means 5% of 500. So called 500 is now your daily drawdown. So 5% of 5,000 or 500 is $25. So that means what you are going to be trading is 5%. Do you understand? Now, that is per entry. If you succeed in that trade, you are taking another trade, you still work with 25. Do you understand? Then if you want to use 10%, that is $50. Let's say you have finished this trade and then you have made the whole money, you have closed it, either profit or loss. You are now entering another market. So entering another market, you are still going to use that 5%. Do you understand? Okay. So you use that 5%. Exactly when you are winning, you use that 5% and continue hunting. Then there's a time it's going to get complicated, especially when you have on a big drawdown. In a big drawdown, this thing is going to reduce because calculate the 5% of what you are allowed to lose for that day. You are going to see reduced to this. So, but let's just work with this. So let's say you are on 100,000 account. So what you're exposing to the market at a go is $250 in anticipation to make 500. That's what you are doing. All right. So I'm just giving you, so the above are the 5 to 10% of your daily drawdown that will amount to 0.25 to 0.5% of your total account. So therefore, the principles of risking 0.25 to 0.5 of your equity can work, but risking 1% of $100 will not deliver anything to you. So this principle can be applied to any prop firm. So you may be using just get the 5% or 10% of your daily drawdown, depending on your risk tolerance, but at least 5% is good for beginners. All right. So for personal funding of your account on your account, use as follows. So maybe $100 to 300, risk $5 to $10 of that money. Then just look at them in this way. All right. So I've just done this. Okay, now, let's go to the chart. So let me show you how you take trade. So we have two different platforms that you are using. So I have to experiment on both. One is you are using, one is that you are using, call it for me. One is that we are using, excuse me, we're using what? Sorry. One, we're using Trade Locker, all right, because of the prop firm we're using. We're using Trade Locker, and then we're using Trade Locker, and then we're using MT5. So let me use example. So this is how I send my signal. When I analyze the market, for instance, if I was okay, I think I send a gold signal like this. When I analyze the market, so these are the things why I told you about market entry are in three portion. All right, a reversal point, pullback or retracement, then what again? Breakout and retest. So now I sent a signal this morning. Now, an example of it is that I sent it like this. So sometimes I may not have time to do the wordings. Now look at the way I sent the signal this morning. I think it got to somewhere, I can't really remember, maybe somewhere here. So let's use this as an example, okay? Now, when I send this signal, now chances are there that when this signal was sent, you were not there. Do you understand? So if this signal was sent, you were not there, the market was already running. But on a typical way of this signal is this. What does this signal actually simplify? What this signal says is this. There are three parts of this ruler. So you two must learn how to use it because it simplify your trade. Now, this ruler says, you see where the purple or the orange, I use different color on my trading view anyway, so that when you're going to see color. So let me just quickly even change the color now so that you will see it. So can you see now something like this? So now this color, which is the dark color, right? That is the place where these two colors meet, that is the entry price. Okay? Where those two colors meet, that is the entry price. So that means you are looking at 4,220. Huh? No, let's look at it. That should be 4,222. That is the entry price. Then the stop loss is at how much? 4,227. That's the stop loss. Now, so why I love to use this psychological level, especially on gold, I don't need to have problem. Any of this line you are seeing, I have many lines. Those people who are, if you are my student, you will learn about the psychological level. If you look at this trade now that I've sent out, there are about how many places for take profit? This one is too close. But there is a center of this 4,220 to 4,210. So there is a center of it. What's going to be center? 4,215. So that means here, take profit has already taken place here. So you should understand because underline from here to here on gold is already 50 pips. And you know our strategy is 50 to 100 pips. You can make more than that, but targeting on that basis, sorry. Now, so you have this. So ordinarily from here to here is some good profit. So that means TP1 must have been taken by now. So imagine you do not split your take profits level or your entry this year is going to be a problem, right? So this is what it is. So that means this is how this trade, you have take profit here, another take profit here, another take profit at the center here, another. Let me just do a drawing because I wouldn't have all the time to draw it all the time. So one, I may do sometime when I have the time, I may label them, especially when it has to do with gold, even Bitcoin. I may label them so that you get used to it. So I may now label like this. TP equal to 4215. Do you understand? Now, Dick equally is a TP. If you are my student, you understand that, okay? Then TP equal to 4205. Remember, because between 4 to 10, and 4200 is 4205. So from here to here is 50 pips. From here to here is 50 pips. From this black line to this major line is 100 pips. Then from this major line to this black line is 100 pips. So this one now, same thing. It's now to be 41, because this is 4190. So it will be 4195. Do you understand? So TP. So sometime if I have that time, I could do that. But if I didn't do that, I just want you to acclimatize. Okay, so now you can see the way these signals were sent, right? So when you see it on the group, if I send it this way on the group, so what has given is this. So, but the simplest one is that sometimes I may have time to type it. Maybe I say like this. You will see that the signal might come this way. Entry, you may see 4227. Okay, TP. So sometimes I write TPs. I will now write them one after the other. Okay, 4215. I'll put comma 4210, comma 42, right? Yes, 42. All right, so 4205, comma 4210 in that order. So I may send it this way. Then the next you will see is SL. So SL equal to, all right, so maybe 4227. This is how sometimes the signal may come. Now, if you look at this now, for anyone who have entered here, have made more than that 50 pips. Let me show you how. From this middle line to this point, it's already 70 pips. That means you have done 70 pips and the trade continue. Now, this is the cheap kit. If you come and the signal has already run, let's say the signal had gotten to TP1, right, and TP2, and you are just coming. Don't jump into the market. Wait some time. So just like what the market is doing now. So imagine when the market was already here was when you come. Relax. Wait a little. Let the market again may pull back. Like this trade now is pulling back. It may return back to this point and reject from there. That is where you now want to find an entry, so that you don't just rush into the market. Because if you just rush in, by the time you enter here, this pullback will weigh you down. But people who have entered here, number one, they have taken TP1, the other one continue. But so sometimes when the trade is now running that way, okay, you want to see that, okay, I just want to enter. No, you wait for a pullback to occur, and then you can now find an entry. Do you get it now? So this is a practical example. So now, assuming I send this type of signal on our group, so you now see it. Okay? You now see it like this. Let's go. Let me just send it to any group. Let's say send it to just a general group, for instance. Let me send it to a general group like this. So now this is a general group. Now, so I'm going to experiment because, so I'm experimenting on two platforms. Number one, I will do first experiment on Trade Locker, and at the same time I'll do experiment on what's it called? Experiment on trading, on MT5. So let me go to Trade Locker. So this is an example of Trade Locker. So I just want to enter so that we can easily facilitate what I'm saying. Now, so like, let me just, now, this is where you come. This is where you come. So let me just enter and I'll go back to do this experiment. Now, your major work that you have to do, that you must do, is that you are supposed to know what should be my entry point, what should be my engagement, how much am I supposed to engage? That's where we're talking about the lot size, how to split it. So now, let's come to this, your consciousness. Your consciousness is this. Okay, how much is my own prop firm? How much is my personal account? So let's take somebody who is trading with $1,000. or somebody who is trading with $50,000. So your daily drawdown is 2,500. Now, what you can engage is from, but this is my own policy, not general policy. What you can engage is from 125. So let's say you are working with 125, which is 5% of your daily drawdown every trade, not just per day. Okay. So now, where do I do this calculation? So the signal that was sent, what is the signal that was sent, right? You need to know what is the stop loss, right? What is the stop loss pips? Now, so if the signal that was sent is stop loss pips for me, because you may not be privileged to have trading view, or even if you have, may not want to go there. Now, how do I know my, oh, so I actually made a mistake here. I think it's 2-2. Why the stop loss is that 227. So, okay, so now how do I know what is the pips of my stop loss? So your stop loss, how to get the number of pips. So now let's quickly do the calculation. Just minus your entry point, minus your stop loss from your entry point. So you now say 4227 minus 4222. What do you have? We have 5. Now, you know, this is gold. So 1 in gold is 10 pips in Forex standard. And 1 pip in dollar function, 1 pip, if you are using 1 standard lot. So 1 pip, if you are using 1 standard lot, 1 pip is $10. So you should be aware. That's why you see that we always say reduce your lot size. So now, if I'm using this now, go back here and I say this. So look at it. Lots and dollar value. So 1 lot standard, that is 1.00. What is the dollar value? Is equals to $100. Sorry, $10. This is called 1 standard. All right. So when you now use half, so you can do your calculation, half will be 0.5. So now we now have what we call mini. All right. Mini lot. Mini lot is 0.1. That is 1/10. All right. 1/10 of the standard lot. So 1/10 of the standard lot will be how much? $10 divided by 10. That gives you how much? That gives you $1. Do you understand? Then we have macro lots. So 1/10 of that 1/10, that will be 0. Oh, so 0.01. So this is the lowest you can have in Forex. But in synthetic, you can have what we call nano lot, which is going to be 0.00. So, but let's stop here. So equal to, so what will be the dollar implication of this? The dollar implication of this will be divide that $1 by 10. So you're going to be 10 cents, 0.10. That's it. So you can always get your calculation immediately you are doing anything. Now, so 1 standard lot in Forex is 1.00. Now, what we're now saying is that when you are trading with gold, if you see 1 on gold, look at this now. See this gold, this is 4.46, thereabout. So when it's any number you see on gold, so any number you see on gold, if it's 1, it's times 10. So now, we now said that 5 that we got, minusing this from this, that 10, that 5 you got is how many? Is 50 pips. That's 5 times 10. That give you 50 pips. So imagine you are now using 1 standard. If you use 1 standard, that means 50 pips times $10. Automatically, if the trade hit your stop loss, you have lost $500. Do you understand now? Okay, so now let's quickly go. So you just understand this implication. Now, you are now going, as I go to this platform, position sizing. So you can just put it in euro. So the link is already on the script. So click on it. It will take you there. Now, you are now working with $2,500. Remember, you are working with $2,500 as your daily drawdown. Just know what is your daily drawdown. Now say use 5% of your daily drawdown. So that's it. So how many pips is the lot size? The stop loss is 50. So you now say, okay, calculate. So that means you are permitted to use 0.25 here. That means you are still going to lose 125 if the market hits stop loss. So 0.25. So you can divide into 3 portions. How do I do that? You can say 0.1, 0.1, and 0.05. Very simple. Okay. So you already have in your mind now that I'm going into the trade and then I'm using 0.1, 0.1, and 0. You can see the trade is returning back. So some persons who just like the trade I just entered now will be running at loss, right? So, but nevertheless, not an issue. Remember, what we're doing is experiment, okay? So now, you can see now, say TP1 has been taken. So ordinarily, you're supposed to wait when you see the market has taken TP1. So you may see the market return back to this source before selling. But nevertheless, the market can even change entirely and return back to this, even the entry point, or go to hit the stop loss. So these are variables that can happen because the market is actually really pushing, because this is 15 minute time frame. So you remember when we are doing our normal scalping on gold, we have tools that give us all of those entries. So you can see this is a powerful trade. That's why I said if it has to do with gold, you don't over disturb yourself. Look at it on 3 minutes. These are already saying we are supposed to be buying, right? But overall, yeah, you may buy, sell here, and eventually go down. So, but if you look at it overall, somebody is buying. These are a different topic for another day, all right? And so that will give you what you're actually looking for. Okay, so now let's go to, now that I have entered a trade. So I'm running at loss about $1 something pips. So because of the time I enter. So what am I going to do here? I've entered a trade. So let me go back to like 5 minutes, perhaps, or 15 minutes. Now, I've entered the trade. Now, in your case, because you are entering late, so what should I do? Should I still put the stop loss where they say? Well, perhaps I may still do that, but that means you are going to have a big, right? That means you are going to have a very big kind of, you are going to have a very big kind of stop loss. So let's say now I've entered here. My market was entered at this price, 4.2. Is that so? My short position entered at 4.216. Now, if the stop loss is 4.227, so just do the calculation, 4.216. Now, let's do the calculation. That means 4.227 minus 4.216. That means 110 pips. So if that is where your trade is now going to be taking place, then that means there's going to be a need for adjustment here. So you now see 110 pips. That means you can't use more than 0.01, 0.11 something. So in 0.1, you can, if you divide it by 5, you are going to have 0.02 on your position. So you can still enter 5 positions. That's what it means. So now let's go. This trade is still running. So like you can see now that I'll say wait for a pullback because the trade has started from somewhere here before. So there's a need for a waiting. But now that I've entered, so I've entered one position. So what should I do? I'm going to set my stop loss. So I'll come to the trading tool. So I'll click on this that look like edit. So this pencil, you see edit position. Then I click on it and it gives me where I want to take my stop loss at that 4227. You see, I'm going to lose $10. No problem. Now my take profit, so I can now check what take profit level they give, but I'm going to put this one at random, 4200. All right, 4200. So as my take profit. So I click on confirm. This is done. All right. So assuming I want to take another one, I'll do the same and then so take profit. So let's quickly do that one on MT5. Do you get it? So let's quickly do that one on MT5. So we have to follow meticulously. So it's very simple to actually achieve a good result on this platform. Okay, so follow me, please. Those calculation I did is for what we call trade management. Okay, we always say that they say you must remember first that you are a risk manager before a trader, so that you don't just trade at random. So you have to learn how to manage the risk first.
Recording in progress.
Okay, so we are going to go to MT5. Let's quickly do that so that to do the same thing you have done on MT on the trade locker. So now let's quickly go. Here we go, right? Here we go. All right, so here we go. So now, of course, you are on our group. You are, let's say, you are on any of the group that Planbxpress, funded. So like this is a signal that was sent Euro USD. So I'm just randomly using examples of what we are having, right? So Euro USD, all right? So gold itself now. So let's go with our gold that we're given. So if you look at the signal on gold that we're giving, perhaps you can see now here, there was nothing like I didn't type these coordinates, okay? So I only just sent it. Remember I told you, you can just enlarge the picture and look at the left side so that you can see, look at it. This first signal that was sent, the stop loss is actually at 4233. Can you see? And then the entry is about 422. It's still 4222.41. You get it? Then so take profit 1 and then the next one 2. First take profit is 4204 and the second one is 4190. You say, Felix, why do you see that? Okay, so let's see. Let me just quickly show you. See this edge here. That's where the numbers are boldly available, okay? So the numbers are available. Okay, so you can see the same gold that have sold and given profit now is bouncing back. Yes, and a massive profit for anyone who actually took the trade. Yes, because by that time, the person had made some good profit. Okay, so that's what you are seeing. So I'm just showing you for you to see the practical kind of a thing on you taking your trade. So now let's go to MT5. So now that you have seen the signal, so let's go to our MT5s. Here, now, so here is our MT5. Of course, I don't need to start teaching you how to log into MT5, but there's a need for that. So when you download your MT5 and you create your account, either your prop firm or register on Capital Extend, you have a login detail that was sent to you. All right. So with that, you are searching for broker.